Let's take a look at the global market highlights and news for April 2nd, 2014. Equities keep quiet, gold and crude oil ease, and investors lose interest in safe havens. Let's see what's happening in the global markets now. In the global equities market, European shares today in positive territory, ignoring mixed economic data. In the U.S., the manufacturing ISM was too close to expectations to influence equities. The S&P is around 0.7% higher and set a new record high. EMU finance ministers signed off today on a €8.3 billion aid for Greece, ending a 6-month standoff between Athens and Troika. Okay, Greece is now fully financed for the next 12 months and does not want to ask for a third bailout, although it is still too early to say if it will be able to fulfill that ambition, a Eurogroup head disclosed. Most regional manufacturing PMIs were slightly stronger than expected. Germany was the exception to the rule, and the final figure for the EMU was eventually unchanged. German unemployment data were better than expected, but couldn't influence trading. On Wall Street, the Dow Jones Industrials added 55.81 points to 16,513.47. The Nasdaq lifted 49.05 points to 4248.04, and the S&P 500 index rose 7.23 points to 1879.57. The S&P 500 had earlier hit an intraday high of 1885, setting a new record. Comments from U.S. Federal Reserve Chairman Janet Yellen on Monday gave investors a better idea of a roadmap for the economy. Yellen said she thinks the struggling U.S. jobs market will continue to need the help of low interest rates for some time. In Europe, London's FTSE 100 index rose 0.8%, Frankfurt's DAX ended ahead 0.4%, and the Paris CAC 40 has gained 0.8%. In Asia, Tokyo's Nikkei 225 is down 0.24%, Hong Kong's Seng is ahead 1.34%, and China's Shanghai Composite Index is up 0.70%. In the foreign exchange market, the greenback eased as currency traders looked ahead to key U.S. jobs data due Friday and shrugged off a report showing growth at U.S. factories. The dollar index slipped 0.12% to 80.008, off a 2-week high of 80.296, where Federal Reserve Chair Janet Yellen defended the U.S. central bank's lose money policies. The euro was up against the dollar by 0.26% in New York trading to 1.3810 after Eurozone PMIs printed better than expected. Against the yen, the dollar touched a high of 103.61 yen, its best since March 7th, after a report showed factory growth increased for a second straight month. The sales tax increase kicked in today, worrying investors and putting pressure on the Bank of Japan to act. The pound tumbled to trade at 1.6626 after UK PMI missed expectations. In the commodities space, oil prices dropped today after weak Chinese manufacturing data sparked concerns that the world's second largest economy slowed more than expected in the first quarter, clouding crude demand. Brent crude dropped by $0.24 to $107.52 a barrel, while U.S. crude was down $0.41 to $101.17. Crude prices dropped after China's official purchasing managers index, released by the National Bureau of Statistics, showed mixed results for its manufacturing sector. Gold hit a 7-week low, and other safe havens like the yen weakened. 2 surveys on Tuesday showed that manufacturing in China struggled in March, bolstering talk that Beijing will bring in selective stimulus. Gold, one of this year's surprise star performers after a 2013 slump, hit a 7-week low of $1278.34 per ounce. Gold was recently down 0.3% at 1.2880.20. The price is still up more than 6% year to date. This is Amy Anderson from Option Rally signing off, and of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great day.